And I expect silver to end the year at $25. I'll tell you right now. I'll make a prediction. I expect silver to end 2010 at least $25 or higher.
You started to talk about silver because silver is a really interesting commodity as well as being an interesting precious metal, isn't it?
Well, yeah. Basically, silver has several interesting characteristics at this price level. And I see silver's down $3 or so the last couple of weeks or 3 weeks. What's interesting is when you look at the ratio between gold and silver, the historic ratio is somewhere around 25. That's typical. Gold sells about 25 times the price of silver. And when you look back at history, even in biblical times, that was about the ratio, 25 to 1, gold to silver. Now we're looking at a ratio somewhere between 60 and 70. So that would indicate, certainly just from that historical ratio, a tremendous upside from here. Actually, silver has a strong industrial use as well. And you know about the technology uses for silver. It's used in just about everything, from all sorts of computers to cell phones. It's used in certainly jewelry. It's used as a conduit in electronics. It's used in the cable industry. It has tremendous industrial uses in addition to historical use of coinage and commodity use in jewelry. The silver today, where we are, we're seeing, we haven't seen it yet, but we will see it, I promise you. We're going to see tremendous amounts, pressures of inflation hit this economy. I think it'll happen in 2010. I feel very, very confident in saying that toward the end of this year, you are going to see tremendous inflationary pressures. You're already seeing some comments by Ben Bernanke, and today there was a comment, I think the guy's name is Cohn, the vice chairman of the Federal Reserve, indicated today that you're going to see rising interest rates later on this year to help stem inflationary pressures. This is going to force, eventually, in the next couple of years, this is going to force not only the United States, but many other countries throughout the world to move away from the fiat currency and into coined currency. And the very first thing they're going to use is silver. I doubt that you'll ever see gold coins in circulation in our lifetime by governments. I think you will see certainly a lot more silver coins being used. You'll see the $1 and $5 coin come back. And don't forget, a $5 silver coin is not going to be very big. If silver is $17 an ounce or $25 an ounce or $30 an ounce, and it will be in the next year, certainly $25, a $5 coin is not going to be very big. That's only 0.20 ounces. So what used to be the size of a quarter is going to be $1.50. And the old silver dollars that we used to see a long time ago are going to be $5 coins. So you're seeing a lot of the inflationary pressures beginning to manifest right now. Also at this time, there's a lot of talk about deflation versus inflation. And I'm still seeing some people talk about deflation because we're seeing lower commodity prices. And we're seeing prices all around for everything have not really gone up too much in the last year. I think 1.3% was the average consumer price increase on consumer non-durable goods the last 12 months. Well, just wait, because what's happening right now is the Obama administration, in his State of the Union address, is going to go to war with the banks. Now, why he wants to do that is beyond me. But if he's going to go to war with the banks, it's only going to take more and more liquidity out of the system, because the banks are not going to lend if they don't have clarity and a certainty as to what their costs are going to be. Vice Chairman Cole of the Federal Reserve just mentioned today, I alluded to him earlier, that because of this uncertainty and because banks are borrowing short-term for their long-term obligations, they need to find a way to manipulate those so that they aren't caught in a rapidly rising short-term interest rate market. Now, this further exacerbates the problem with the banks, and the banks still are not quite comfortable with the political environment, meaning that they're not comfortable where they are right now. They have no clarity and certainty what their liquidity is going to be with the Federal Reserve in the future, and what loans and what type of loans the bank examiners are going to require them to write down. In addition, what's going to be the liquidity of their mortgage loan portfolio? Up until now, the Federal Reserve has been buying mortgage-backed securities left and right. Now they just said they're going to slow that down. Well, if they slow that down, then that's going to impinge on the bank's ability to create liquidity for themselves when they need it to create loans, which makes it harder for people like you and I to borrow through the banking system. Now, all this is going to create less confidence for people like us and business people as well, who need to borrow constantly for short-term capital needs and inventory expansion, et cetera, et cetera. Business development, they need to be able to borrow money. So if banks aren't lending money because of their own situation, which is what we're having right now, what you see is, because of the illiquidity, you see a lack of rising prices. So people can easily argue that it's a deflationary environment that we're in. I can see that argument, but it's completely wrong. I understand that argument, but it's completely wrong. That argument only takes place because the inflationary pressures haven't hit yet. They haven't hit the general public yet. The reason is the banks won't lend all the liquidity they've got, but they will pretty soon. It's going to happen this year. And you're going to see very strong inflationary pressures, certainly by the fourth quarter of 2010. Certainly by the fourth quarter of 2010, you're going to see them. And I expect silver to end the year at $25. I'll tell you right now. I'll make a prediction. I expect silver to end 2010 at least $25 or higher. And that'll be the beginning of the strong inflationary pressures that are going to continue to affect all of us over time. 2011 is going to be a difficult year, and 2012, it's going to be full-blown inflation.